Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, November 18th, 2015. Well, folks, take a look at this chart of Skechers. SKX is the symbol. Beautiful bounce today, almost a 10% bounce. Now, this bounce was very easily seen as coming in the chart. You might say, well, how come? How did you know that? Well, take a look at the gap fill level, and this is one of the most amazing chart setups. That's what I wanted to focus on in today's video, is the gap fill play. All right, gap fill plays are unbelievably good, especially when you have an oversold chart like Skechers. So right away you see, again, the chart was going like this, had a gap up, and just ran all the way up. Basically ran from a previous closing level of around $25 all the way up to a high here of $55. That's a huge move. I mean, that's over 100% move since basically April to July. April to July, maybe August, over 100% move up in the stock. So needless to say, the stock started to chop and then collapsed. This is what you have to look for. See where it started the breakout here, where it had that huge run, the gap fill essentially. Gap fill is when you come back in and you fill the former level here. All right, that's the level you're looking for. Notice how this stock, again, collapsed. Where did it go? Right to gap fill. All right, when a stock gets to a major gap fill, the bigger the move up after gap fill and then the fall, the better. All right, so again, notice how this was a huge move up and then a huge retrace. That's even better. That's the bigger the one you get, the better it is. So bottom line is, when it came back in here, that was your buying opportunity at $25. Look at today. 27.5, a $2.50 move off gap fill. That is beautiful. You could also see how it started to kind of show you that was going to happen. Instead of kind of straight down, it started to put in these little tails, right, and started to go sideways. When that happens at gap fill, that's another signal that it's going to bounce. Now, a lot of amateurs would start to say, they'd be too scared, first of all, to step up there. Second of all, they'd start to say, oh, no, it's not bouncing really over the last couple days. What's the matter here? Is it going to go lower? That's the common thought process by an average investor. What this is actually showing us, which is different, is that you're starting to get more buyers stepping up, which is creating these little tails here. The fact that it's not going down anymore is telling you that an equal amount of buyers are meeting an equal amount of sellers. Well, obviously that's a shift from here, right? Because here more sellers were there than buyers, and that's why the stock price was going down. So this is showing like a pendulum shifting or a weight shifting. It's going from negative all the way down to now neutral, and it's just about to flip back to the positive side. And that's exactly what you saw here. And look at that gain today. So again, guys, in future charts, look for big moves to the upside, then big retraces where you fill the gap. This is one of those trades, swing trades, where you can make literally 10-20% in a matter of days if you find the right setup, just like this. It's a great setup, guys. Gap fill is one of my favorite trades out there. It's the highest percentage probably of almost any trade out there. You're literally looking at a 90% success rate, in my opinion, if you look at these type of setups. All right? All right, guys. Come join us at InTheMoneyStocks.com. Let's find more trades. There's plenty of them out there. We keep making money month after month here at In The Money Stocks with our members. Again, come take the 7-day free trial to the Research Center or join the options alerts. Take care.